Right, next up, we've got a fireside with Eddie Lau and Robert Crossley. Can I ask you to come up? Hey Eddie, how are ya? Yeah, I know. It's an annual meeting, isn't it? Welcome.
Thank you.
Floor's yours, gents.
Thank you. Applause and everything, thank you. I'm really excited to have here with me on stage Eddie Lau, who's flown in from Hong Kong to be with us. For those of you who don't know Eddie, he brings with him a really valuable outside perspective on what's happening here in Europe, which we're going to talk about. But also, I think your experience as a CB trader, as a bank, working at a hedge fund, sovereign wealth fund, and founding a listed blockchain company really means Eddie has the full stack of experience relevant to this conference. So welcome, Eddie. Just by way of quick introduction for myself, my name is Robert Crossley. I work at Franklin Templeton, and I run our digital asset and industry advisory services unit, which in English means thought leadership, advice, and strategy. And as some of you know, at FT, we've had a 40 Act fund, government money market fund on chain since April 2021. And we run a bunch of validator nodes on various chains. So basically, as a DeFi builder and an operator, and as a traditional public and private market manager, we completely get and understand why we're all here and why we're so excited. That's by way of introduction. So the point I wanted to make is that this isn't an individual sport. This is absolutely a team sport. And regulators, governments, issuers, investors, managers, custodians really all have to come together if we're going to extract the value from the technology. So the question for you, Eddie, really is, from your perspective in Asia, where we see so much success with the various projects and various initiatives, what lessons should we learn in Europe from Asia and apply over here? And to what extent is that a template for the future?
Well, thank you, Rob. Quick intro of who we are. By the way, I have two colleagues here also. Each of us fly 14 hours from Hong Kong to here. Wow. Arthur Tevin is a listed company in Hong Kong. We carry a lot of licenses. We have 10, which make us the most licensed company in Hong Kong. And the license is actually pretty cool because apart from buying bonds and stocks, the TradFi stuff, we turn them into digital asset enabled. So we can buy Bitcoin, we can mint security tokens, we can sell stable coins, we can keep custody of them, we trade them. So kind of what we do. And then we are also involved with the Hong Kong MA. I know there's one representative from Hong Kong MA, the Hong Kong Monetary Authority, in basically a project called Project Ensemble, which is basically how do you move CBDC to settle real-world asset tokens efficiently.
Can you talk more about that chain between the money and the asset? Because I think that's part of what really gets to the heart of what's happening in Asia at the moment.
Yeah, I guess our job, we have 20 minutes, do we? Probably 18 to go.
We just got 2 minutes of bonus time because we're doing such a good job here. You can't see
15 minutes. Okay, so our goal is to wake you up and make sure that you hear from Asia, I guess. So what happened in Asia is a bit different from what happened here. I mean, what happened here, you see all the amazing things that you heard, all the tokens, all the products, all the financial markets. Awesome. Best in the world, I have to say. Very impressive. If you will be joining the Hong Kong Digital Asset Week, February 2025, it's going to come up soon, in 6 months. You may hear a different story. You may meet more people who are different from finance. You still get a JP Morgan and Goldman and Franklin Templeton for sure, but you will get a lot of merchants and governments people. For one reason, because in China, in Southeast Asia, all these countries have government officials who are very keen to push forward tokenizations. Mm-hmm. Again, in the form of tokenized money, there are government issues. In forms of tokenized money, there are privately issued, which a lot of us call it stable coins. And also tokenizing real-world assets. I mean, not just bonds and stocks anymore. These are capital market stuff. We're tokenizing rice. I mean, trust me, we are actually tokenizing rice that we buy from Thailand to Shanghai.
So you talked about real-world assets there, and those of you who sort of go to DeFi conferences, you'll know it's become very trendy to talk about real-world assets. But one of the messages from the previous panels was really, so rephrasing it, was really that what we should really be talking about is real-world benefits. To make the technology, to make money, the technology has to create benefits that end users are willing to pay for. So the question, Eddie, is where is the money being made today, and where will it be made in the future? Because that's what's going to drive the progress, and that's what's really going to drive adoption.
Well, again, great question, by the way. I guess if you can help a lot of people to move their stuff, be goods around country. Again, by the way, Asia is quite big, so the sea in between, you have to take flight or ferry. So trade finance is one big thing, very big. By the way, sky is the limit. Trade finance volume is huge. So if you look at how CBDC, central bank digital currencies, being implemented, and also one of the primary reasons why CBDC becomes so big in Asia is because they want to facilitate trade finance. So trade finance means you help the government, you help the people within those countries to make the trade better. Do they involve financial product? Of course. So one quick example, there's the reason why we are also, basically in the project that we work for, HKMA, so-called Project Ensemble, we provide an out-of-bay tokens that tokenize the asset, which is rice or could be gold, whatnot, commodities. The financial part, which could be very relevant to all of us here, is someone ships something, expect to receive money, and they hope to receive that money faster. Trade finance, everyone know about that. Banks does that for a living. By having a tokenized financial product, we can actually kind of break into this bank's dominant business. And I won't go into detail today. And if you guys are interested, very happy to stay behind to share what we do. Tokenizations, data, rules and regulations, government supports, helping merchants means that we actually at financial institution have a space to actually develop something new and innovative and make money for us. Basically.
So your message there is that the real world benefit should be the focus as opposed to the bottom-up investment. The investment products come last rather than first.
I would say so, which is interesting because thanks for the introduction. So I started as a convertible bond trader in New York. So we trade converts, we buy and sell, we hash out delta. Back then you would think, oh my God, I can just make money from my screen and phones and screaming and shouting probably a bit. Then you start to know that you're trading these instruments because you're working for some corporates. You also understand that people, human beings, normal people, merchants, are doing business, and then as such, you need to have instruments, financial instruments to facilitate. Fast forward, 2025 coming, this is why tokenization is super important. You're serving people who need it, and they pay for it. In what form? In what products? Of course, financial products.
If you go to tokenization conferences or blockchain conferences or whatever, you hear a consistent story, and essentially it's that tokenization is T+2, like T+2 years, it's going to take off soon. It's kind of like waiting for Godot. What, in your opinion, Eddie, and looking for it from an Asian perspective, what lit the fuse in Asia, or what would light the fuse over here in the West? Is it those real-world examples of tokenizing trade finance and real flows, or is it the regulators coming together with the participants, or is it something else?
That's a very good question, by the way. Wasn't prepared for that, but let me try. We have 9 minutes.
He was buying time there.
All
Sorry,
right, great. Interestingly, when we build all these tokenization platforms, so-called, meaning we're moving either privately owned, again, privately issued money, stablecoins on public blockchain, or when we're moving government issues money, CBDC, on private chain or permission chain, against, again, permission tokens on permissionless blockchain, sorry. This is exactly what we're doing. When we're doing all this chain stuff, tokenization stuff, what really drives the value is the data behind. It's how different systems speak to each other, how a transaction can be perfected with a lot of data. A lot of data that is available, but it wasn't available to public a lot of data that was there but not transparent, a lot of process that was opaque because there's a need for paper and emails. Now that these are all changed. And since they have been changed, and now you put a token over it, then you can derive the value of this data. So to make this work, meaning you have to tell your counterpart who you are, digital ID is one big thing in Asia, very big. Because you don't want to just call the guy up and say, hey, can I do your KYC, and I send you a PDF, and please fill out the PDF, and DocuSign. Those are great, but these are a bit old. It will slow down your efficiency on chain, meaning the reason why you want to build a chain or few chain or cross chain is totally defeated. So digital ID is one big thing. Then the use of data, the processing of data, and using tokenization to display or transact or exchange those data to create values. This is pretty much at the heart of what we do in Asia in a lot of projects. And guess what? Does it involve a tokenized treasury fund? Absolutely, because money moves around. When money moves around, you want to earn interest, and let's go back to what we said earlier, interoperability, swap atomic settlement between tokenized money and tokenized asset, cross-chain between, or maybe between a private network or a public network, whatnot. So these are the discussions that are completely relevant, but they are actually part of the ecosystems that deliver a bigger values. They have to be there to, meaning financial product has to be there, tokenized financial product has to be there to fill that gap, to make sure that you earn more interest efficiently. But the fact that you must have a business going on, and your system must be designed and revolutionized to facilitate the business. And by the way, these are cross-border business, and these are real humans who are trying to sell bananas and rice that you're working with.
Great answer, Eddie. For the last decade, we have, my team's interviewed the C-suites of sort of well over 50 trillion of AUM every year, of wealth managers, asset managers, disruptors, asset owners, etc. And one of the things that I've always been struck by is just how much interest in, let's call it crypto technology, is growing, and how much the debate has matured. But, and it's a really important but, how do firms, and this is a question for you, Eddie, because you're so practical, how do firms avoid the trap of, I suppose, being innovation tourists and being stuck on an island of perpetual POCs? Or asking it another way, how do we stop solving for individual career risk and actually move the ball upfield and get stuff done?
How to make sure not being fired by, by the board.
Exactly. But that's what we're all solving for.
Yeah, well, we've done a lot of POC, by the way, and we still continue to do POC. But what we notice is that perhaps you can choose who you want to work with. Mm-hmm. And if you look at, I actually did a survey among all my colleagues. How much time do you spend with people in finance? How much time do you spend with people in technology, including blockchain, crypto, whatnot? How much time actually do you spend? And I hope the answer is more than 50% for this one. How much time do you spend actually with our clients? And a lot of clients are merchants. Mm-hmm. Because they want to move their asset faster and quicker. Do you spend time with them, build your products? And why are they not paying you? Why are we still talking about POC? And why are they not trading the volumes that they are supposed to trade with you? By the way, these people trade for a living. So they're not going to wait for us to build something. They continue to trade. But why are they not putting even 1% of the trade through your systems? So we have kind of a culture of killing projects that don't go live. We're patient but impatient. We're impatient when we figure that our clients do not put trade through. And interestingly, it means that we spend a lot of time with our clients, and for some random reason, we actually spend more time with merchants, again, trade finance people. Because these are the people who are willing to spend money to revolutionize their systems, open up their data, use tokenized method, be tokenized money and or tokenized asset, to make their life better. Are we building silo system with them? Absolutely not. When we build something that can connect to you guys. I was actually having a good discussion with one of the company who feature here, another platinum sponsor actually, on how our token can show up to you guys so that you guys can buy easily. Yeah, it's right there. So what we're doing is also connected to what you guys are doing, except we want to focus on people who pay us. And if we don't get to that standard, they won't pay us. So, and interestingly, the use of stablecoin, the tokenization of asset, a lot of them are merchants. And because of these relationships, it derives other types of business opportunity, including money market funds, tokenized format.
In the prep, Eddie went full Jerry Maguire on me about show me the money and where do we actually make the money in all of this. But I think the serious point that you're making is that those examples that you gave were around it being demand pull rather than supply push, yes, and solving a problem wherever it is in the real world, a real world problem, rather than starting from the product.
Yeah. Because starting from a product, which a lot of times you start from a technology. I mean, you did mention about my earlier career when I started trading when I was 20 years old, and don't ask how old I am today. I've been trading for 18. You know, I've been trading for 20-something years. When we trade, we use phone back then, and we shout and scream, and we have, we don't really have computer, really. I mean, we have some computer, but not great computer. These days, you trade automatically. Each second, we trade 7 million trades, something that a blockchain can never match, because they trade in hundreds of thousands maximum. So the reason I mentioned this is whether we use a machine that trades 7 million per second, or a phone call.
You said 7 million.
7 million trade per second. Or 2 phones, by the way, we had 2 phones, so that we can do 2 trades at the same time somehow. Well, we only 1 mouth and 2 ears, but anyway. So it doesn't matter what tool you use and technology you use. The gist of it is you're moving stuff around. You're trying to move stuff around. And the more we understand this, we know that it doesn't matter what technology we use. In fact, it would be ideal if it's a combination of old technology, existing technology, so that we don't have to spend time to fix it, and money, with a bit of twist. And the twist is blockchain technology. And we had to find that fine balance, otherwise we'll be forever in POC, we'll be spending a lot of money, and I'll be fired 10 times before I make a single dollar.
I'm afraid, ladies and gentlemen, we don't have time for questions.
45 seconds.
We have time for one question, if anyone would like to ask a question.
Gentleman is standing over there already, so I guess we should wrap it up. But I think
How much money are we following?
for financial markets, 16 trillion or 60 trillion, I forgot, But trade finance is a lot bigger. Trade finance is 100 times, 10 times bigger than financial market, put it that way. Yeah, and they move more. Yep. But trade finance market that relates to financial market or capital market means a lot of money. Yeah.
And I think the one final point I'd add to that, because I've been sort of covering Asia for a long time, is the clock speed is higher in Asia. The clock speed is faster in Asia in terms of getting stuff done and coordination between the different parts of the industry. And that's part of the reason why the pace of progress that you see is so much faster. I'd encourage you to grab Eddie afterwards because he has a wealth of experience.
And do come to Hong Kong for Digital Asset Week, Hong Kong, February 27, 2025.
And in fact, thank you both, because you are both assets and helping to educate this community exactly how the market structures. The only thing I would add to the trade finance argument is that it is the wealth management space that a lot of people in this part of the world really focus on as well. So thank you very much, Eddie and Robert.
Thank you.